Hello and welcome back to 2023. This is Switzer TV. And because the country kind of still is on a holiday, I'm in a bit of a holiday mood as well. And so what I used to write about, I'm going to talk about with this little excerpt on Switzer Daily. And let's kick off with some of the big stories of the week. The first one will be coming out on Thursday when we get the latest unemployment number. And we're expected to be at a 48-year low. That's 3.4%, extraordinarily low. Economists surveyed by Bloomberg say there's going to be 22,500 jobs created in December, and that follows a surprise 64,000 jobs created in November. Now this is all good to see that the economy is looking pretty strong rolling into 2023 with all these terrible headlines around recession in the US. Not here, but a slowdown for sure. House prices possibly falling by 20 to 30%, which I don't believe. I think they will fall, but they won't be falling by that magnitude. And so, this number on Thursday is going to be very interesting. If it's really strong, it could mean that the RBA will keep raising interest rates at a faster rate than most of us want them to do. Now, what's interesting in the US, they've recently got some better than expected inflation numbers, and that's making a lot of analysts and experts over there say, well, maybe interest rate rises are close to the top in the US, and that's the reason why the stock market has rebounded in the US and then here as well. A company like Amazon last week was up 12%. And what I'm thinking is we're seeing a sneak preview of what should happen over 2023. I think the stock market will do well both in Australia and the US over 2023. It might not happen instantly, as Rachel Hunter once said in that shampoo commercial. It won't happen overnight, but it will happen. That's what I think is going to define the 2023 experience on the stock market and also on the bond market. It's going to be a good year to invest despite the fact there could be some negative headlines around recession. In the US, the Bank of America CEO, Brian Moynihan, he thinks there's going to be a recession, but he says it's going to be a mild recession. Any sniff of recession will stop interest rate rises in the US, and that will mean tech stocks will do really well. And that's why I was interested to see Amazon last week up 12% in 1 week. So my overall feeling is, even though there's going to be some negative headlines, a lot of these negative headlines will imply less inflation, less interest rate rises, and probably no interest rate rises by mid-year, and that will be really good for the stock market and particularly tech stocks. A company in Australia called Megaport, MP1 is the ticker code. The average consensus rise by the analysts who survey these companies think a 45% rise or 49.5% rise for Megaport is on the cards. But UBS and Citi see over 100% rise, and that must mean that they believe there's going to be a tech recovery over 2023, which I think will help stocks go up. Also, remember, this is the third year of a US presidency. Best year for the stock market historically, and there are a lot of other good things like China's now reopening, very good for the Australian economy, potentially good for coal exports because China is taking away the ban on coal exports, and other products like wine might also experience those same kinds of things. So I think negativity will prevail for a while around the economy, but progressively things will get better over 2023 and the stock market will show it. That's my best guess on day one back at work. I hope I'm right. Good to see you. I'll talk to you tomorrow.